Good morning, traders. This is Shegun Chat 247. I train traders how to trade in harmony with the market. Today is the 20th of May, 2024. We are looking at the US dollar Japanese yen this morning. This is one of the pair we did in our weekly trade planning session yesterday. And the reason we are we are looking at the dollar yen is because it's one of the pairs we have in our portfolio selection. So I'm going to show you a quick framework, which I encourage you to have something like this. Is we do the portfolio selection. That is always the number one thing we like to do. Okay, because that gives us a narrow focus on a couple of pairs. I don't like to be scrolling through 20 pairs when I'm about to trade. So at least I have a pool of four, three. The smaller the pool, the better for me, so that I can focus my attention on those pairs. Then we go to the wave structure count, which this is my methodology. This is something that I have learned over the years to develop. This is not Elliott wave or anything like that. This is the natural movement of price. Okay, and then we need to look at where we actually execute our trade, which is the trade location, how we execute and when we execute. Then the rest is the bigger thing, which is the management and the psychology of the trader, how you interact with the market. So this morning we have a sell interest in the US dollar Japanese yen. Dollar yen is one of our bear, sell pair. Okay, and for me the picture is very clear as to what I should be expecting, and that is the number one thing I say to my students is think of the structure. Okay, this structure is calling for a downside move, even though we've seen in the last 2 weeks from this low, which was made on the 3rd of May. Okay, price has been pulling back. If you have been following my video, you will remember when we actually had a sell here. It broke higher the following day. We waited and we sold again, and it broke higher. Then I said, I'm leaving the dollar yen alone. Okay, and that happens. Okay, when sometimes we are trying to pick the price from a lower time frame, looking at the wave structure, and they do expand the wave structure. But when you have a trade, first trade, and you analyze it, you're satisfied, and that trade did not work out, you can take the second trade with the same analysis. If that second trade did not work out, leave that trade, that pair alone. There's something that is outside your picture, okay, and you have to learn how to let go sometime, because that trade will come back to you whenever it falls back into your analysis and idea, basically. So what we have this morning, without taking too much of your time, is we analyzed this yesterday. Price came into this sell zone. They broke above it. They broke above the sell zone. Then we can now see coming back in. This move here is a this move. It is a reset of a trend. This year, okay, violated structure. Very important. Not only one structure, it actually violated two structures. So this is what we call the path is changed to the downside. Okay, so we have this move. So that means for me, I can trust this wave here. If I count this wave on the 15 minutes chart, it's actually a very directional wave count. Okay, because the 5 was divided into 3 waves. I don't need to go through all that now, because I've been doing this for so many people that have been following me. You at least you have an idea of what I'm talking about. So when I have a directional move like this, okay, this wave count, the magenta wave count, is on the 4 hour. So the 4 to 5 is going on. It's not finished yet. We've just seen the first move and the correction to that move. So this is a very technical trade for me. If I take this trade, my risk is very small. Okay, because I don't want the price above this level. And that's my first thing I need to think about. Where am I going to be wrong if I take this trade? Trading is not a right or wrong endeavor, but I don't have any other word to use other than where will I say to myself, this thing is not going the way I expected it, and where should I be getting out? Okay, and that price is above here because that would be a bullish violation. We've seen a break of two waves up, which is normal for a reset of a trend. As long as that move that completed the reset, this move from this low, I was saying yesterday, there's no structure here. Absolutely, there's no structure. Okay, this is the structure now. And what I'm saying is, if this move continue above this momentum high, okay, then we will stand aside. All right. But if we start to break down this low here again, so let me change this to red. Okay. And we can label that sell point. This is my gift to you guys. I do this type of analysis and trade execution maybe once or twice a week for those that are not personally my student. Okay. The ones that follow me internally as in students of mine, they get this every single day, 3 or 4 pairs like this. So I'm doing this for you that are following me on TradingView and on YouTube channel. Okay, so if we do not go above here, there will be no violation. Okay, but if we trade above here, there is a violation, and that invalidates any sell setup. The lure for me of selling the dollar yen is because we have a 3 at the low here, and that is my probability. The wave structure give me a probability that no indicator is going to give me. That's why you don't see any. It's not that we don't have indicators that we use, we do have them, but they they are they are very, the impacts they have on my decision making is very minimum. Okay, so for me now this morning, we can take the trade at the break of this low. Okay, 155.60. The stop loss will come above here. You may give it some room. 155.98. Let's say 156 basically, just to clear the high a little bit. Above here, we will not buy. Above here, we will not sell. We will leave it alone for price to do what it like to do if it gets above there. But if we start to break this low, we will take a trade. If we break above below the 155.24, that will be the better confirmation that that's the first trade there. Okay, a break of that point. Then if we proceeded to break here, boom, that means the bearishness has continued. Remember, we have a violation point, bearish violation point when this thing came down before. Then this will be a continuation move. Okay, and we should be expecting the low to be broken. For me, this is a continuation trade. We like to use the Russell wave for all the continuation. Okay, so in terms of projection, highs to low, no, we like to use the key ratio. Russell is always for the reversal. Okay, so we've seen a deep correction. So my target will be here. This will be my first target before I'm going to be expecting a bigger pullback. That area is 152.85. Today is Monday. This may happen today. If it doesn't happen, you'll see a break of this high. Okay, if we have a break here, don't take more than this here. So the maximum risk you should have on this trade is 47 pips. Okay, or let's say 50 pips, round it up to 50 pips. The risk, the reward, okay, is nice and very, very good. Okay, if it works, you're going to make a nice box basically, and you can quantify the money before you take the trade. But that is the idea going into the week. Today is Monday, 20th of May. My name is Shagun Chat 247. If I have time today, I'll post some updates on this trade. If not, we can recap it the next time I post video on TradingView. Have a nice trading week ahead, and stay safe and be blessed.